Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss one question of issue of shares where shares are issued at discount. For your information, according to Companies Act 2013, which is our latest company law, companies are restricted from issuing of shares at discount. There cannot be issue of shares at discount to public. Company can issue shares at discount only in exceptional situations where shares are issued to employees or shares are issued to promoters, etc. Here in this example, we are going to understand if company issues shares at discount, what will be the journal entries. Let us go through the question. Johnson & Johnson Company Limited issued 50,000 shares of rupees 20 each at a discount of 10%. Share is of rupees 20, that is the face value, nominal value. Discount is 10%. 10% of 20 rupees, which comes to 2 rupees. Payable as follows: application 5, allotment 6, and first call 7. On application 5 rupees, allotment 6 rupees, and on first call 7 rupees. If we add all this, it comes to 18 rupees. Here they have said discount of 2 rupees we are required to adjust at the time of allotment. When problem is silent, we are required to adjust discount amount at allotment stage. Here clearly they have given that at allotment stage we are required to adjust the discount. In other words, 6 rupees we have to take from the shareholder, 2 rupees discount. So at the time of allotment, total amount adjusted will be rupees 8 including discount. Applications were received for 75,000 shares. So there is oversubscription because company want to sell 50,000 shares. Company has received application for 75,000 shares. So this is clear case of oversubscription. And directors made pro rata allotment to the applicants of 60,000 shares. Company has received application for 75,000 shares. Pro rata allotment to the applicants of 60,000 shares. It means to the applicants of 60,000 shares, company has allotted 50,000 shares. So pro rata allotment ratio comes to 6:5. That means that those who have applied for 6 shares, 5 shares will be allotted to them. Total 75,000 shares application has been received. From this we will deduct this 60,000. So there is a balance of 15,000 shares. This is altogether rejected. So not considered for allotment. Application for 15,000 shares is totally rejected. So company is required to refund the entire amount received from those rejected applications. So 15,000 multiplied by 5. Company has to totally refund this amount of 75,000. Show journal of Johnson and Johnson Company Limited, assuming that all money received. First, we are required to record application amount received. This is the first stage called as application stage. In all, we have received application for 75,000 shares. Amount is received by company, so bank account will be debited and equity share application account will be credited. First entry, bank account debit 3,75,000 to share application account 3,75,000, being application amount received on 75,000 shares. Of this, certain applications are rejected by the company. We have done working note. Company has received application for 75,000 shares and directors have made pro rata allotment to the applicants of 60,000 shares. So out of 75,000 shares, only application for 60,000 shares are considered. Balance application for 15,000 shares are not considered, rejected. Therefore, the amount will be refunded. The entire amount which we got from them, that is for 15,000 shares, per share 5 rupees, it comes to 75,000 rupees. Now we have to record entry for refund of application amount. This entry is for receiving application amount. This entry will be reversed to record entry for refund of application amount. Share application account debit to bank 75,000, being refund of application amount on rejected applications. Now application amount on allotted shares will be transferred to share capital account. Share application account debit to share capital account. On 50,000 shares, application amount 5 rupees per share will be transferred, being application amount on 50,000 share transferred to share capital account. Here we have completed first stage, that is application stage. Company has made pro rata allotment to the applicants of 60,000 shares. So excess application money on those shares is not refunded. This amount will be utilized towards allotment amount. Let us find out that excess application amount adjusted towards allotment. excess application amount adjusted towards allotment. Application amount received by company on 60,000 shares which are considered for allotment. 60,000 multiplied by 5, amount is 3 lakhs. Less application amount on 50,000 allotted shares. 50,000 multiplied by 5, amount is 2,50,000. So 3 lakh minus 2,50,000, excess application amount with company is 50,000. Amount due on allotment after adjusting discount amount, it is 6 per share. 50,000 multiplied by 6, amount is 3 lakhs. Excess application amount adjusted 50,000. So amount receivable from shareholders, that is amount due on allotment, is 2,50,000. कंपनी ने जिस तरह से शेयर्स अलॉट किए हुए हैं, कंपनी के पास 50,000 एक्स्ट्रा एप्लीकेशन अमाउंट आया हुआ है. यह अमाउंट अलॉटमेंट के टाइम एडजस्ट किया जाएगा. अलॉटमेंट के टाइम शेयर होल्डर से डिस्काउंट एडजस्ट करने के बाद 3 लाख रुपया आना है, उसमें ये 50,000 एडजस्ट कर दिया है. सो एक्चुअल अमाउंट अलॉटमेंट पे शेयर होल्डर से लेना है 2,50,000. Equity share allotment account debit 50,000 multiplied by 6, amount is 3 lakhs. Discount on shares account debit, this discount is a loss for the company. 50,000 multiplied by 2, that comes to 1 lakh. To equity share capital account, 50,000 multiplied by 8, 4 lakhs. That is being allotment amount due after adjusting discount. Bank account debit 2,50,000. Equity share application account debit 50,000. To equity share allotment account 3 lakhs. Being equity share allotment amount received and excess application amount adjusted. Here we have completed allotment stage. Next stage is share first call stage. First and final call is of rupees 7 per share and all the shareholders have paid this amount. So we are required to first record entry for demanding first and final call. Company demands final call from the shareholder and accordingly final call letters are sent to the shareholders. Company records an entry equity share first and final call account debit to equity share capital account. On 50,000 shares, Final call is of rupees 7 per share. It comes to 3,50,000. In response to this call demand, shareholders have paid the amount. So that will be our next entry. Bank account debit to equity share first and final call account 3,50,000. This is an entry for final call amount received. In this question, we have recorded all journal entries up to final call. Here, one thing we are required to understand that issue of shares at discount is not a common concept after the era of New Companies Act 2013. We are doing these journal entries and considering the circumstances taking into account the old company law. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.